Hi, my name is Mark Biernat. I'm a monetary economist. In this video, I want to talk about the Russian ruble. But before you turn away, I've got a very interesting story. This is going to be an interesting video because it's not just about Russian interest rates going up to 21%. It's just not about Visa and MasterCard fully ejecting from Russia. It's not just about the hyperinflation that is on the verge of Russia. I'm going to talk to you how the Russian ruble is burning. And I'm not going to just talk about the low volatility. Usually high volatility reinforces a trend. The low volume, high volatility in the short term. That means intraday, intra-month, intra-week, and how the spread is large on the ruble. A lot of technical indicators. I'm going to tell you a personalized story, a personal story about the Russian ruble as evidence why Russia is about to burn, the Russian ruble is going down. So again, I'm a monetary economist. Before I tell you the theory, I'm going to tell you a story. I like to work out, and if you know anything about working out, if you work out in the morning, 75% of you stick with it. You work out in the afternoon, 50% of you stick with it. If your workout is in the evening, only 25% of you stick with it. So I like to work out pretty early in the morning, sometimes before light is up, and I was jogging, like to be fit, early morning, pre-dawn, and I was out by the bus station. Saw this lady there hanging out by the bus station, and there were a couple of women, and I started talking, just mixing light conversation, pulling out some Polish, and they were speaking Russian. I asked them if they were from Ukraine. They said, they're from Russia, specifically Moscow. They are not Ukrainian, they're from Moscow. I asked them, what are they doing here? What are they doing in the EU? How did they get here? They didn't tell me how they got here. But what they did say is this, that they're earning money. Now, before you jump to any kind of conclusions, when I first got to Poland, I was earning money in Stare Klepash, and the bus station is not far from Stare Klepash. Stare Klepash is the farmer's market. It's the old market, Stare, okay? And I used to take halva, which is like a sesame sweet from Ukraine and other things, and bring it to Klepash and sell it for money. It's a very good way to make money as a foreigner. And a lot of foreigners are in Klepash, a lot of people from like Tunisia selling olives, and I like to go to this Greek store. But I haven't seen these women in Klepash, but let's just say that they sell fruit, okay? Whatever. But, I got to talk about Russia, asking how it was. They're sending money back because they have no money back home. And they pulled out, wads and wads of cash. And again, no judgment. They're probably working in selling fruit in the market. And what do you know? I bought from them. I bought one of these babies. It's a Russian ruble, okay? It's a 50 ruble note. That's probably worth like less than 50 cents. Big spread, probably worth in a real market, I don't know, 10 cents. It's got this goddess Neva on it, the Neva River in St. Petersburg, and got these columns, these famous columns, no culture in Russia. Anyway, they think this goddess Neva is going to protect them, the rivers, here's the Russian ruble, and this is what I bought from them, okay? Paid nothing for it, happy to get rid of it, they just wanted hard currency. And look at what I'm going to do with it. I'm going to burn it, man. And if you're Russian, look at this, okay? I'm burning a ruble. This is a Russian ruble, and it's burning. And if I was kind of toxic, everything in Russia, if I was Russian, I would say this. Look at this. Look at that going. Russian ruble, currency worth nothing. I would say this. I would say, President Snow, Tsar of Russia, fire is catching. And if we burn, you burn with us. Right? This is the ruble. It's worthless. You might as well burn it. I was thinking of using vector art graphic to make you something in the bathroom. Kind of like cool. Better blow it out. Ow. Burning. Okay, maybe fire hazard. Probably shouldn't do it. But that's the ruble. And that's where I got it from. And that is what they were doing. They were earning money to send it back to Russia because the average now in Russia is about $400. Now you get these Russian YouTubers, Instagrammers saying, with their beautiful blonde hair or whatever, saying, oh, but it's all fine in Russia on 400. 400 is not bad. 400 is bad because a computer costs more, car costs more, Everything costs in Russia. How are you going to survive on 400? The Tsar of Russia put this bread and circus program in where they gave huge subsidies for flats, for apartments. Everybody bought it. Prices went up. Those subsidies are going away. It's going to be it's like a pyramid scheme. Bubbles crashing. You've got 21% interest rates. They're claiming 8.3 or something in the inflation, and the IMF is repeating it, and so all the Western media people are repeating it. All's fine, everything good, Russia big, Russia strong. But we know that's not the truth. We know if the interest rates are 21%, and that's the favorable bank, that's like the prime rate or a subprime rate. When you go above that, if you're going to be a business, you got to lend at 25%, okay, or borrow at 25%. And add to that they're predicting in December rates are going to go up further. Meanwhile, the ruble's on decline. It hasn't broken resistance. It's still at 1 penny, and it's really just kissing and hugging this resistance. I'm waiting for it to hit this resistance and break it. Then I'll officially decree it. And that once it breaks resistance, I'm thinking, and you can quote me on this, beginning of 2025, it's going to be, less than a penny. We're talking 0.098, 0.097. If I could short it, like I said, I would. Okay? Visa and MasterCard pulled out. Eventually, you're going to have barter exchange ratios in Russia, and we've seen this in the 90s. And people don't believe me, and they say, there are no shortages. But what is a shortage? A shortage is nothing more than you can't pay for it. You may have potatoes on the shelf, but let's say the potatoes, and I'm just exaggerating, are $1,000 a kilo. And, then that's a shortage. Nobody can pay for it. Yeah, you can always get something at a price. Basically, that's the way the market and the black market work. But you can't get it for the average person on a pension of let's say $200 a month. So if I was a Russian to make the world a better place, all of humanity, I personally, like I said, I have a piece of land, a działka, in Poland and both in America, and I grow on it. But as I'm living in a city apartment, my whole balcony is microgreens. I start growing microgreens, stocking up on potatoes, looking into things like that, because that's the only value you're going to really have when hyperinflation sets. Now, hyperinflation is something different than just high inflation of they probably have 20% inflation. They're selling bonds, I think, at 21%, and people aren't buying them because inflation is even higher, and they're issuing new bonds at 23%. So you're going to say hyperinflation is really expectationally driven, and it takes a life of its own. This is when you have a currency collapse. And if you ever watch The Office, Dunder Mifflin went under in Oscar's explanation, the accountant, because they had everything in long-term and fixed goods and nothing in short goods. Bankruptcy is usually a liquidity crisis. They can't pay the vendors. There's liquidity short-term, and that's what's going to happen. That's what's starting to happen in Russia, central bank. Even there's, the people in charge of the industrial complex creating this geopolitical event are already calling for Elvira's resignation. She's the only one keeping inflation kind of low in the 20s. Once that happens and inflation hits, it's a total tax on everybody, poor. Nobody's going to be able to pay for anything. Everybody's going to have a liquidity crisis. The whole system becomes unraveled. I can't wait to see it. So fire is catching. And if I was a Russian citizen and I wanted to be on a good side of history, don't be so lame and say, once he's down, I was always for the opposition. No, you do it now. You burn those rubles in front of the camera if you want, okay? And you say, President Snow, Tsar of Russia, we burn, you burn with us. That's somebody I can respect. That's a real Russian, okay? I can't respect anybody else unless you're really starting to, at least quietly behind the scenes, donate to Ukraine. These people were sending money back. They were at the bus station. Let's say they were going to work at Stary Klepash, the farmer's market, sending money back. There's a reason they're doing it. There's scores of them. And, I got that ruble. I got some more. I'll burn some more for you guys. I could go on about the micro and macroeconomic situation there, but I think you get my point. The ruble is going to burn. I thought it was 2026. It's going to be 2025. The economy collapses. It's going to be worse than the 1990s. And this is not speculation. I'm a monetary economist. And I'm going to back this up by one closing statement of academic research. If you look at economistic Friedist, I think that's the Swedish way of saying economic journal, started by David Davison in 1925, Knut Wicksell. He published in the appendix of Interest and Prices. You can get that at Mises or anywhere online, Interest and Prices 1898. And it was published in the English version, I think, 1936. But in the appendix of that in 1925, Knut Wicksell wrote extensively about an economy at war, how productive goods are being destroyed, productivity goes down, and this causes a non-monetary cause of inflation. So inflation is not just caused by this recklessness of fiscal expenditures in Moscow over this geopolitical event. It's caused by real shortages created by significant decrease in productivity. Knut Wicksell, the father, the grandfather, the king, whoever you want to call it, of monetary theory. Look him up, the Swedish economist, Stockholm School. He articulated this very clearly. And you can look in the appendix of Interest and Prices. And you read that appendix. It was published in the Economic Journal 1925, and you will see that prices are inverse to productivity. So this is not a normal monetary crisis. It is a monetary crisis coupled with real factors, and that's going to put it in a place maybe worse than Venezuela. That's how Russia's going down. And how it's going to go down, people, the oligarchs, the kleptocrats, are going to say, well, we'll eject the Tsar of Russia now because we can save grace. Maybe there's some puppet in the United States that's going to lift sanctions, Russian asset in the United States that will be in power that will lift sanctions, and everything will be okay. So we're going to do a cost-benefit analysis of what we can eject this Tsar of Russia. Maybe they're thinking that, but I'm thinking it will happen so fast, like all economic crises, nobody will know what hit them. And on the streets, there'll be more people, just like I talked about this morning. Okay? So my name is Mark Biernat. I'm a monetary economist. I'm an academic economist. I'm not just spewing hopeful messages. I'm backing it up. I gave you a nugget of research, and you can look into it. The Russian ruble is burning and is going down. Have a great day. Thank you very much.